Coming up, solving Australia's housing shortage. Retail sales continues to slow and the oil price rising. What does it mean for inflation? That's next. Daily 10-minute business and finance news wrap for this Thursday, the 28th of September 2023. Later on Market Day, we'll speak with Elizabeth Tian from Citi on the day's market action. But first to the CEO of Brickworks, Lindsay Partridge, which has warned that Australia's deepening housing crisis is only going to get worse, with housing approvals currently at 10-year lows and population growth at a record high. It comes as the company posted a 54% decline in full-year profit. Lindsay, BIS Oxford Economics says we're about 70,000 homes short in Australia. What's holding us back from building these new homes?
Well, I guess at the beginning of the process, the incredible time it takes to get approvals. I mean, the approval process is really convoluted, it's really dysfunctional. And it takes like 9 months at best to get approval for a house in Australia. In New Zealand, it's 21 days. When I first started my career, you'd get approval in a couple of hours, walk up to the council with your plan. So the approval process is the beginning of the problem. The second thing is the amount of taxation that's come through the whole process. From land development to every part of the process has got taxation, which makes it more expensive. But if you've got all those things lined up, then you sort of run into trades seem to run out when we build about 200,000 homes a year. At that point, we sort of run out of trades. That's another thing that has to be addressed, which is a bit hard to appreciate, really, when you've got such high immigration. Clearly, we're not immigrating the right people to the country.
The government's new $10 billion Housing Australia Fund plans to build 1.2 million homes over the next 5 years. Are we on the right track? Or, based on what you just told me earlier, are you concerned about the ability to reach those numbers?
Well, I think somebody recently said that's a nice aspirational goal. And I like some of the policies I'm hearing about getting trades into the country faster, and about New South Wales having cookie cut blocks of flats, the 3-story and 4-story walk-ups like we used to. They're all positive things, but we've got to see them, play out. We've got to see some actual action. And if they want to get to those numbers, they need to start thinking about how they're going to get that action in place this year, not next year or the year after, this year, because we need it to fill in the hole that there is next year. Next year we're likely to only build 175,000 homes, and they're really talking about wanting to build, 250 or 300,000 homes a year.
So some of that action, what would you say can be done to alleviate that housing shortage right now?
Well, the planning system is the biggest problem. The states control that. New South Wales had this problem before. And if you look back in the past, the Askin government released 20 years of land onto the market in the late 60s. And that gave the land supply for the next 20 years. So that's what needs to happen. They need to flood the market with land, approved land for housing, that you can get approval to build a cottage in under a month. Until that happens, they're basically dreaming, because they think they're going to build those homes.
Those that are looking at building a home right now, the costs of those raw materials, the cost of labour, the time to build a new home, have they improved at all, or are they expected to in the short term?
Now, unfortunately, costs are only going to go one way. And, there's been various things that have driven the costs up over the last 2 to 3 years, with all the disruption caused by COVID, not only in Australia, but worldwide. But going forward, we know that electricity prices are only going to go up. We're currently seeing oil prices climb. Now, oil or diesel is in every part of the process of manufacturing the products for houses, but also building the home. When you put the concrete pump, it's run by diesel, and on it goes. While fuel prices are high, that sort of works its way into every part of the economy.
Speaking of inflation and costs, how has that contributed to your 54% decline in full-year profit?
Look, the decline is more really about the fact that we had an absolute unbelievable record result last year. We still delivered the second best result in the history of the company, so it was an excellent result. We did miss a couple of points on margin with inflation, and we really got caught out, I think, in the first quarter of this year. And I call this the infrastructure-driven inflation, where the demand for raw materials for the airport and the metro and all these things, short of the market. There was shortages of materials everywhere, and that really drove up prices earlier this year. We're now getting back on top of that with price rises, but hopefully when those big projects end, we're going to see more normalised supply arrangements and more normal cost arrangements for those products.
Finally, property trusts, a curious statement in your release today that Sydney has the tightest logistics market of any major city in the world. Can we explore that a little bit? Why, and what does it mean for your business?
Well, it's a bit of the same reason why we have a shortage of housing. I mean, the approval process is so tied up. We're fortunate enough to have approved land available today to build industrial warehouses on, and we are signing up new clients as we speak. But our competitors who have got land in other areas, they're caught up in the approval process and planning and getting water and getting electricity to those sites. And, we don't think there's going to be any improvement in the land supply in Western Sydney in the next couple of years. And the reason why that market has so much strong demand there is, that's the area that people want to be around the airport. They want to be around the rail lines and things that are going in. And that's where there's plenty of workers. And so they want to build warehouses in that area because it's great for distributing product around Sydney. But there's just not enough land, and the approval process is lagging.
The only thing we haven't discussed in all of this in terms of housing shortage and the housing supply issue is the mix of dwellings. So you're talking about land release. What about the move to more medium/high density? How much of that is also an issue?
Well, look, that's right. The building commissioner calls that the missing middle. We used to build one of our companies, one of the greatest buildings we used to put product into was the 3- and 4-story walk-up. So we know there's whole suburbs are built out of these buildings. They're built well. They've lasted well. They're very low maintenance. They're very low cost to build. Very affordable housing, and it's not there. We either have detached housing or high-rise. And so I agree with the building commissioner. We need to get out there and get those cookie-cut, standard-approved plans so developers can get those approved and get them under construction. They're quick to build, and we can create a lot of housing. So I agree with you wholeheartedly. That's what we need.
Partridge there, the CEO of Brickworks.
Now, Market Day on the SBS On the Money podcast.
The Australian share market was little changed today. The S&P ASX 200 down just 0.1%, 7,024. That's despite a fall in consumer discretionary stocks on the back of softer retail sales numbers. But oil stocks like Woodside, your Santos, they all did very well because oil prices have continued to surge and are up at the highest in about a year. For more, I spoke with Elizabeth Tian from Citi.
We've seen the oil price, really ratchet up since around June, and that's on a couple of, factors. One of the key things that started the drive back up was when Saudi Arabia and Russia announced to the market that they were prolonging their production cuts, really limiting supply. There's worries about the global economy slowing down and therefore less demand. So Saudi and Russia really preempting that by extending those production cuts. And of course, overnight, we also had news in the US, the inventory stockpiles really at real lows. So that saw the price of West Texas oil price up around 3.6% to around $95 a barrel. So short term, a lot of factors. We're likely to see the oil price stay high around these levels, possibly even higher for a while.
We know from a consumer perspective, they see the impact via higher petrol prices, and we know that means higher inflation. So is the market now worried about inflation being reignited?
Absolutely. Very, that's key focus. Central banks have worked so hard the last 18 months, really trying to clamp down inflation. We've seen inflation really start to come back down, and this is going to really make central banks, pause, have a look. It's very inflationary. We hear all about the 1970s, the oil crisis, and where inflation was back then. So we've seen in the markets, in the last couple of weeks, yields, rising higher, a number of factors, but certainly the higher oil price, that's not helping this whole inflation narrative, keeping central banks really on tenterhooks.
If global central banks are on tenterhooks, what about Australia's Reserve Bank? We had some soft economic data out today. Retail sales out, slowing to a 0.2% increase in August. That's weaker than expected. We also saw job ads down, although they are still at high levels. I think there was also some stats that showed that consumers or households are tapping into their savings for the first time since the global financial crisis. So deposit rates are down now. What does this all mean for interest rates? What's the market saying we'll see next week when Michelle Bullock holds her first RBA meeting, interest rate meeting as governor? What's likely to happen?
Yeah, so central banks, including the Reserve Bank, are really seeing data point to data point. It's been a very difficult, cloudy last 18 months to see, is inflation coming down fast enough? We think the Reserve Bank will still pause next week. That's what the market's widely expecting. But we still think there's possibly one more rate hike in the market locally for Australia. Now, we've talked also about how yields have been ratcheting up the last couple of weeks. This is whole narrative in the market about higher for longer. When the reserve banks and the central banks started lifting rates 18 months ago, it was widely expected they'll lift rates. Markets will, the economy will kind of react to that very quickly, slow down very quickly, and start to cut rates again. And that hasn't really happened. So it's now markets are now pricing in maybe we won't get those rate cuts quite as quickly, and these high interest rates, unfortunately for mortgage borrowers like myself, will just have to continue to pay these higher rates possibly for longer.
And just finally, any market movers you've seen make news today?
Yeah, so obviously, as you mentioned, the big moves was in the energy stocks. Now, we are going into a period where, there's the Golden Week in China. There's a lot of Asian markets that are shut, Korea, India. So we're starting to see liquidity possibly come out. Markets will be nervous. We're going into the October period, which is actually, historically a very volatile time for markets. And at the moment, really the key focus is central banks, inflation, how long are rates going to stay higher? There's a whole shift in narrative.
Elizabeth Tian there from Citi. This SBS On the Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.